Here we are, MMTs. This is called the GLD Gold Trust. And what a long-term, beautiful 2011 bottom. This diagonal trend line, MMTs, comes all the way up to the belly. Now, what happened was that this long-term trend for 2011 trend, that is, we gap below this trend line. And now this line is going to be what we call a 100-day simple moving average. This lower horizontal trend line is significant because we have come down, tested it, and tested a double bottom in here, and we made these highs up here. But notice that this high right here with this daily reversal doji on the GLD is that the high was not, we never broke these highs over here for 2011 calendar year, and that we traveled along this lower trend line, and we had that gap down the other day. And for this whole period of the bull market equity rally is that gold has been left behind. We're going to be looking at entries and see if we sell through the 100-day. So if we were to sell through the 100-day, then we would short it down here to the 200-day moving average on the GLD. This is the lower trend line, MMTs. So it's where we're going to bounce, and it's all on a daily chart now. And one of the things on the GLD is got a 3-day sell signal on the GLD. And the GLD is just the actual ETF to gold, but gold has taken a pretty good haircut today in itself. It was down $17 an ounce at one time. And on the GLD, we're going to take a look to see how this pans out here as far as this simple moving average and this longer term bottom. So what used to be resistance on the way up of that all-time top is ultimately going to be the support over here at that 100-day moving average, and then down. If we sell through here and break that trend line, then there's that. Here's the really long-term trend. It's called the 200-day simple moving average. And one of the things you'll notice here, that just like the Dow, just like the S&P, just like the NASDAQ comp, that their long-term simple 200-day simple moving averages did not break. And we've had a really good 5-day rally in the broader indexes. Now, this is a very long rising 200-day simple moving average. That same rule will apply. If we break below there, we can see that green line is at 200-day. That is really going to come into play, but if we don't break below the 100-day and we get support, we'll just be in a trading range on the GLD. If we do break below it to come and test that long-term 200-day simple moving average, we're going to be all over this thing. And we're looking for good entries because we believe that the pullbacks, when they happen, as always, that we bounce and there's good gains in there. Right now, on a daily, you have a buy signal or sell signal here on this moving average convergence divergences now. And this is a support line right here. This is what it's looking like. This is that 100-day moving average, this color line right here. So I'm going to draw another trend line for you. This is the neckline. This is the lower end of a neckline. This is the top. This is the longer term diagonal trend line. You got a gap below it, and you continue another gap down. So gap 1, gap 2 to the 100-day. We like this one. We'll be looking at how to get entries. We'll take a look that if we are going to break below there, then we would sell short. Stop market orders will get triggered right down here, should that be the case. This is where it all started right here to make the highs right here. So we like the GLD.